What's up, traders? It's Chris Capri here. We got another top trade review video here. This is a live trade that is from our member Stefano, who's been with us for a couple of years. He took this fantastic trade on the Swiss index, which is their kind of major S&P. So we're gonna, just like we did in the last video, we're gonna review his entry, his stop loss, his take profit. We're gonna cover the price action context leading into the trade. And I'm gonna analyze some of the things that I really like about this trade. I think it's a fantastic trade. And then I'm going to talk about some things I think you could have improved on so you can find more profitable trades, see how we trade, and improve your skills in trading price sections. So let's jump into this. So this is just kind of his using our language for the trade setup here. This is the Swiss 20. He posted this the 19th, which is, just a couple of days ago. So we have pretty stable uptrend. We build a floor here right around 10.2. You can kind of see this stable floor that's in place here, 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 and here. So impulsive move, corrective structure at the top, new impulsive leg higher, and creates resistance about 10.53, 10.55. And then we get some impulsive selling, and it goes right back to the prior floor and base of support where the bulls had launched this higher. And lo and behold, the market holds it, shoots it up higher, and repressures this resistance zone. So clearly communicating that the bulls are in control, and they're continuing to press on control here. Now, what's interesting is that this sell-off, the first time we hit this 10.55, was very aggressive, very impulsive. But then the next time we get here, you notice that the pushback from the bears isn't as strong. You know, the candles aren't as big. There's more wicks to the downside, suggesting that bulls are kind of buying intraday or intra-candle on this one here. And it stops at the 20 MA and then just represses against the same resistance zone. So smart sellers are looking to get out of this position. They realize that they're not getting any ground and they're losing ground. So smart sellers are getting out. They recognize the breakout ahead of time. And then the instrument or the index here just kind of hangs right below it. So the bulls right up against resistance are just holding it right there. And they're just pressing, and the bears got no pushback. So this leads to a large breakout, which means that anybody short here or here is now stopped out. And when they get stopped out, they have to flip to a long. So what does the market do? Comes right back to this resistance level. So we've now created a new floor in the market here. It was resistance. Now it's turning to support. That's two sides of the market, the bears and the bulls, confirming that and kind of communicating, hey, this is a very important level for us. We're communicating this through the price action and order flow. Both sides are respecting this, so it's a very clean level. It's what we call an RRL, role reversal level. That's when a level that acts as resistance turns as support, or a level that acts as support turns as resistance. The role of that level is flipped. This creates a whole new leg higher in the trend, and the market pulls back right to this support zone, which he correctly identifies, and launches higher and goes back towards these highs. So what is he thinking? It's double tapped here. He's thinking if the market gets back here, he wants to get long, and he's going to retarget these highs, assuming that the market's going to kind of ping around in this corrective structure here. So he wants to get in here, he wants to target the top of that range, take profit, and that's it. And he places his stop loss at 10.468. So let's see how he did on the trade. Trade works out to near perfection. The market does indeed go exactly to this level, and it pretty much goes straight to his target. So you know you have a really good timing and a really good entry when the market only goes a few points past you and then pretty much goes straight into the positive and goes straight to the target. That means your entry location is near perfect. You're getting in the exact same place that the institutional players are getting in, because they're saying, hey, we consider this to be an important area to get in. We're going to put in a lot of size. It's not even going to go past this. It's going to go straight to the target. So you know you had a premium entry when you did that. You got in with the institutional players, and the timing was right as well. And so it didn't like hit it, go down, wait a little bit, and come back up and then go to the target. It just hit it and went right to the target. So in terms of the entry location, near perfect. You know, it's just a near perfect entry. Now remember, his stop loss was right about here. And I think he was trying to kind of get it below this peak here. I felt like the stop could have been tightened just a little bit, but maybe he was trading conservative and wanted to give it some space. Totally fine, but some alternatives for stops. You got these 2 weeks here before launching higher and a new swing high. So clearly there's a strong amount of order flow willing to defend that. So you could put it just below this right here. This is one potential location. And then you also have this, which is kind of the beginning of the breakout here. So you could put it just below this. So I feel like the stop loss could have been optimized. The target is near perfect in the sense that he's going for this resistance, and he wanted to go just a few points shy of this because he felt like, hey, maybe there's some orders stacked at this area and this area. So if there's orders stacked there, I want to get just a point or two below that so that they don't push back before I actually hit my target. So he's taking a conservative entry, which I think is good, or a conservative target, which I think is good. The only thing that I would adjust on this is that you're in a clear bull trend right now. And so that means that you have the dominant order flow on your side of the market. And when you have that, if he's not trading set and forget, and he is actually managing his trades, then my suggestion would be to take some profit, maybe half your position off the board here, with the idea or thinking that, hey, there's a potential breakout here. All the indices right now are in a strong bull trend. They're all breaking out. They're all making higher highs consistently on a weekly basis. So knowing that the dominant order flow is on your side, that increases the probability of a breakout. And so one alternative option would be to take half a position the first year off here and then trade the breakout, try and capture the breakout so you get more alpha onto your trade. But other than that, it's a pretty much a near perfection trade here, just very well done across the board. One last point I do want to make is if you look at this particular candlestick pattern, you can see that it's a pin bar. And for those of you that are candlestick traders, if you trade pin bars, you're a candlestick trader. You're not a price action trader. You're a candlestick trader. And personally, I don't think pin bars are actually good entries. I think they give you very weak entries. Case in point, one of the two entries on pin bars is that you buy on a stop above this high here. Look at this entry compared to this entry. Which one has more profit potential available? Obviously this entry. Which one is a later entry? Obviously this entry. You could take the 50% retrace tweak entry, but even then, what does that do? You're getting in right here. So again, you have a less profit potential than somebody who's getting in a more optimal entry here. That's why I've said before and done videos on it again, pin bars give you retail entries. They are not optimal entries, and institutions aren't waiting to get in this far away from support. They're all getting in right here. So that's pretty much what I wanted to say on that. Overall, a great trade by Stefano here. A+ trade across the board here. Congrats to Stefano on this here. And that's pretty much it. So did you enjoy this video? Make sure to hit the like button there and subscribe to our channel. For a small channel like us to keep doing free videos, it really helps us when you engage our channel, you leave comments, you give us likes, and you watch as much of the video as possible. Really helps us with the YouTube algorithm, which then supports us to continue doing free videos like this. If you'd like to learn more about how we trade and you like to trade or train with us directly, you can check us out at secondskiesforex.com. We have courses on trading FX, stocks, commodities, global indices, trading price action on any instrument, any time frame, without any pin bars, getting optimal entries like Stefano did. You can learn how to make these same trades. Stefano made more than enough money in this trade, that one trade just to pay for this course and then some, and you can do the same. So I hope you enjoyed this video. I'll look forward to your comments and feedback, and I'll see you in the next one.